the Tinubunomics and the Nigerian markets now with my guest, Johnson Chukwu, who is a market professional and the group CEO at Kari Asset Management. A warm welcome to the show this evening, sir. Good to have you.
Thank you, Bosse, for having me. Good evening.
Great. Thank you so much. I was going to start by asking you if you remember that song back in the 80s, There's No Stopping Us, Oli and Jerry. Does that song describe where President Bola Ahmed Tinubu is right now, feeling really good? He signed 4 executive orders on Thursday, set up a committee to review the country's portfolio of taxes, and your stock market is in the heavens, in the manner of speaking. 1.1 trillion naira this week. Do you feel there's no stopping us?
Well, Boston, that song you played reminded me of the old days. I'm sure the Z generation will not even, I've never heard anything like that. And I could remember the Soul Train era, you know?
Yes.
But interestingly, the rallies we've seen are sources of, could be described as a source of relief for Nigerians who have gone through, who are going through a lot of difficulties and who are going through households that are going through pains. So at least we've seen some bright lights in terms of what has been the capital market in the past 6 months and 1 week. We saw the market gain about 3.4% this week, bringing the total all-share index gain to about 23% in the first 6 months and 7 days of this year. So like you rightly pointed out, the gain this week was almost a third of what was gained in the last month. And if you compare to the 18.96% that was gained in the first 6 months of this year, that was something like more than 25%. But back to whether they're not stopping us, I'm beginning to have my concerns. And this is coming from a market operator who has been around for quite some time. You know what the thing is, say that when the wave is high or when the tide is high, it lifts every boat. We're beginning to see votes in some equities. We don't seem to understand the underlying reason why people are putting so much money in them. And we're seeing rallies in some equities that we can't see any fundamental change in their fundamentals. So when that begins to happen, and like they said, the Warren Buffett said, when everybody becomes very aggressive or becomes very
when everybody's greedy, you get when everybody's greedy, you get scared, and you get scared when everybody else is greedy.
So yes, I'm getting scared because when I looked at the gainers of this week, and I could point out to you, Boston, of the 10 top gainers, 4 of them, I couldn't see the fundamentals. So what is happening? People are bidding up for any stocks. Of course, the structure of the Nigerian economy today is different from what it was maybe in 2008 when the market crashed. Principally because we have a fund manager who has a portfolio of more than 14 trillion that they are managing. So they are a patient, they are what they call patient capital. They could take a position in the stock and stay there for a long time. But I doubt if they are the one bidding up for this stock without strong fundamentals. So in effect, in summary, I think there will be at some point when the dance will stop. I mean, Soul Train ended, discos have ended. We're now going to we moved to a club era when they no longer pay. A friend of mine was telling me that look at the transitions that happen in that entertainment industry, particularly the disco club era.
Yes.
You started with era when people had to organize and pay to go in, and now people have to just buy drinks when they come in. So I think there could be a stop, and they might have to be at least a period when the market gains will have to moderate.
I understand. What I'm trying to say is that we've seen this rapid fire economic firing by Mr. President in terms of the fuel subsidy, the FX market, the rejigging that the central bank seem to be doing on a daily basis and all of that. And then you've got those 4 executive orders and what have you. Do you think this will keep at least the music going? Is it a signaling that is of confidence to investors?
Well, it's good music to the ears of investors. I think I did say it, I've said that different fora. There have been 2 major heavy lifting. The removal of petroleum subsidy and the harmonization recently that some of the 2 heavy lifting some of us have advocated for a long time. Granted, maybe the approach, the style may have been different, our style of recommendation may have been different, but there are heavy lifting that needed to be done and they've been done, and the heavens have not fallen. So investors are excited, and then if you throw in the mix into the sweetness, into that mix, the sweetness of these executive orders, freezing the implementation of the Finance Act, delaying it up to September this year, suspending the excise duty on telecommunication services, which is by all standards a double taxation, and even appointing Taiwo Oyedele as the presidential committee chairman to review the fiscal framework and our tax system. And we know who Taiwo is. So these are what they may call icing in the cake, and the further kind of seem to improve the investment environment or economic environment. And that's why investors are also conscious of that and taking advantage of that. And we have seen rallies that are beginning to get to a worrying stage.
But what more would you like to see from President Tinubu's office that could impact the investment market more positively and more fundamentally speaking, beyond just riding the wave? Like you said, when the tide is high, everybody is enjoying it. It's only when the tide goes low, you know who's been swimming naked.
You know, one of the things that is still missing is liquidity in the FX market. So what we've seen is we need to see what the government is doing to bring in liquidity into the FX market. The harmonization exchange rate, the removal of subsidy on petroleum products will demand some level of foreign exchange. One of which is for the central bank, they need to have the war chest to be able to intervene in the market appropriately, and I use the word appropriately with all seriousness, to ensure that we maintain foreign exchange rate stability. So that foreign exchange availability is still not there. You also need that availability to make sure that you have also price stability in the downstream, in the pump price of petroleum product. Because if there is no stability in the FX rate, you are going to see continuous fluctuations, possibly increments in the pump price, which will further worsen the standard of living of Nigerians. So what is missing now is, one, how the government is going to assess some support, some foreign exchange support, and two, addressing the issues around the unintended consequences of these two policies as it relates to the most vulnerable in the society. Many households, many of the people at the rung of the ladder are actually sweating it out. I mean, they are sweating, and you need to intervene quickly. I was speaking with somebody in the government today when I went to Abuja, and one of the things he told me that he was able to take me through what they had marshaled out, the arrangement they had marshaled out in the past government, which was supposed to precede the removal of subsidy. Unfortunately, the then Senate president came and the president had suspended that, and it became what we had. But there was an arrangement to provide gas-driven buses, about 1,000 buses, in 20 in each state at the minimum, and Lagos having more. So they have, on average, they would have somehow 720 buses at the state level, to pushing the impact of the subsidy removal. They had made provisions to provide CNG at major capital and major locations to ensure that people convert from use of fuel to use of CNG. So those measures were not implemented. And that's why it seems that this policy is rubbing off very strongly or negatively on the average households. But I believe the government has to do something quickly. And once they do those two things, issue of assess FX to make sure the central bank has the capacity to maintain rate stability, and then also support the most vulnerable in the country. And that,
from all indications, Johnson, sir, from all indications, it doesn't look like President Tinubu is in a hurry to go into any debt, as it were, to either do palliatives or whatever. It doesn't look like that to me so far. Maybe too early. What do you think? Because the $800 million World Bank loan, nobody seems to have said anything as much on that. So perhaps he's looking at how to get things done without getting Nigeria more into debt.
Yeah, Boston, the economy is a very delicate thing. Managing the economy is a very delicate thing. You have to look at what does economy say, economic logic say, and then what does the social factors say. It's a country that you have 1.3 million people who are living in multidimensional poverty. That number has increased. And most importantly, the financial poverty level has worsened. And we all know that there is a limit to the tolerance of human beings. At some point, when you put people to the wall, and you put them to the wall, and the wall refuses to shift, they may fight back. I think we shouldn't wait I relate with people on the streets. I relate with people who this is rubbing off negatively on. And both say that I absolutely support the removal of subsidy. I absolutely support harmonization of exchange rate. But I'm also an advocate that we must make provision in this society to accommodate the needs of the most vulnerable. And I think the government must be conscious of that and take measures to make sure that we moderate the impact of these policies on those most vulnerable.
Okay, great. Let's move a bit into the corporate news. What's driving the big size transactions on FBN Holdings? Tell me what you know.
Yeah, Boston, I can't see any compelling change in the fundamentals of FBN Holdings. All I could say is that because we've seen rallies in other banking stocks, and some of them are trading above the FBN holding shares. So people are, like I said, some of the trends we are seeing today are trends that should worry any descending analyst. So we are seeing investors say, okay, what is in this sector, who belongs to this category of operators or quoted equities or counters, and where is their stock compared to the stock of their contemporaries? People are no longer looking at fundamentals with all sense of responsibility. I can tell you the gainers this week, many of them, I have not seen any change in the fundamentals. So I think what is happening to FBN Holding is that investors are saying, look at where Zenith Bank has gotten to, look at where GT Bank has gotten to. So they are beginning to say that, look, counters in a particular class should all be trading within this region, and they are bidding up those prices to get to that region without looking at the earning capability of each of these quoted entities.
Interesting news also coming through, but again, if you find hundreds of millions, billions moving on a daily basis, perhaps there's a smoke with fire somewhere. Maybe some big boys are trying to move things around, because this is a very big financial supermarket. You agree with me that FBN Holdings PLC really is. But again, this is something that the market will be looking at. But this news seems to be a little bit disquiet with Coronation Insurance PLC looking to buy out existing shareholders towards a delisting from the Naira Exchange. Any idea what's going on here? Another delisting could be in the making.
Yes, interestingly, this is an insurance company that we're beginning to monitor. We felt will be a major competitor in that industry. It will compete with the likes of Mansard. But all of a sudden, we are hearing a delisting, buying out minority shareholders or other stockholders in this equity, and backdating it to sometime like 2021, which for me is of greater concern. And that's why we've seen this current week, we saw a 27% decline in the stock of that WAPIC or Coronation Insurance. I can't hazard a guess on what is going on the minds of the key owners. Basically, I know that their policy is that their associated company businesses are channeled most of the insurance through Coronation Insurance, and so they have a catchment market which had begun to excite investors that made people to start bidding up for their equities, but only for them to come up with this. I think it's something that needs to be interrogated further. I think in terms of whether they have the capacity to comply to the requirements of listing, they clearly have and the asset companies are listed. Companies like Access Bank is listed. Yes, Coronation Merchant Bank is not listed, but they have knowledge of and competence in managing listing requirements. So I can't say it's a pressure from listing. I can't say it has to do with difficulty in complying with regulatory requirements of a listed company.
Well, interesting. Let's shift very quickly. You talk about petrol prices and fuel subsidy earlier. All marketing stocks on the NGX have been red hot since the fuel subsidy removal announcement. Should I buy? Should I hold? Should I sell?
What I would tell you to is buy after you have thoroughly assess the fundamental of each of these quoted companies. One of the things you need to look at is that what is their history of performance. Of course, the performance will be there will be a divergence between their historical performance and current performance. But key drivers in the downstream sector will be the network of retail outlets. Those with larger network of retail outlets are likely going to optimize returns or see significant growth in their earnings and profitability. So it's not just any downstream operator. You have to look at their footprint around the country in terms of retail outlets, which is a major asset of downstream oil and gas marketing operators.
So it's just not just about the names, but about what is going to happen next in the energy space as far as oil and gas is concerned. But let's get back into the FX markets. The Central Bank of Nigeria returned to the OTC FX futures market this week with its quotation. What do we know about that right now in terms of how the exchange rate, how that is shaping up the exchange rate market?
Yeah, Boston, but the central bank return into the futures market has actually led to some calming in the concerns of operators or people who needed FX. Instead of people are now slowing down their front loading, because what happened was when they suspended that futures market, which allowed people who have a need in future to go into a futures contract and have it settled in future. So people began to front load their orders, and then that put a lot of pressure on the market. So we've seen today and probably last year, we've seen some moderation in the exchange rate, at least at the parallel market, the transfer market. So what that means is that this decision by the central bank to come back to the market, to the futures market, has taken off away that pressure of those who have future needs trying to front load those future needs and go to the market and buy today.
Interesting. My final question is, do you still see a further room for there's no stopping us in the stock market moving into the rest of July? Earnings season will soon be here. At least the banks and other early birds will start reporting as early as third week in July or thereabout towards the end of the month. So do you think I should keep that music on somewhere? There is no stopping us.
No, Boston, I think you have to tune down that music. We are getting to that point where the fundamentals are no longer supporting some of the stock prices today. I think we're going to see a slowdown in the market gain in the next couple of weeks and possibly some reversals. And after that, you're going to see a period where the stocks will trade at what they may call their support level. So we're going to see some corrections. People are going to take gains. Once they see market losses for 2 days, they start taking gain, locking in their capital gains. So I don't think it's going to be an unlimitless, timeless rally, because we are beginning to lift boats that might sink because they already have holes. And when you begin to see that, some people will jump into some boats that may not be able to make it to the hinterland.
Okay, so I'm going to look into my archives of the oldies or the classics of the music, as it were, and I get one record label ready when the market begins to make a re-entry. But for now, let the music play on. Thank you so much for tonight. It's the TGI of Johnson Chukwu, the Group CEO, Akari Asset Management. Have yourself a pleasant weekend and see you next time.